What's going on, traders? Hope everybody had a great trading week and you are enjoying the weekend. We're going to be doing an analysis of the S&P 500, the Spider ETF, look at some areas where we may want to engage the market and manage our risk, and what to potentially expect coming into the start of the new week, Monday, August 28th. But before we do that, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. And also, in addition, I wanted to thank all my subscribers and listeners for taking the time to be prepared for the market each and every day along with me. I hope the content and daily plans are helping you navigate these markets. So first thing we're going to do is take a quick look at the economic calendar for next week. We have Jackson Hole now behind us. Pretty much a nothing burger. We had a little bit of volatility in the morning, but other than that, not really too much reactions in price action. So now with that behind us, what do we have on the calendar for next week? Well, nothing on Monday. We do have job openings on Tuesday at 10 o'clock. Other than that, we do have really not too much on Wednesday that I am particularly looking at. Thursday, we have initial jobless claims at 8:30, as well as PCE. May want to keep an eye on that. And then Friday, September 1st, we have non-farm payrolls, unemployment rate, and those are at 8:30. And then ISM manufacturing at 10. Really not too much that I am too concerned with. So I will post a full calendar up on my Twitter when I do have that available. And if you aren't following me, my Twitter is @_SharkTrader. You can find all the links to how to follow me on other social media outlets in the description notes of the video. All right, so let's get into some charts here, and we'll start off with the macro and the weekly chart. And just looking at this this candle here. Now, we did finish the week green, as you can see. But as far as bullish candlesticks are concerned, this is probably the weakest one, I would say. You can see here, really, we pushed right up into this short area that we were talking about, and the selling pressure came in here, indicating this, obviously this wick here, moving down and pushing the price lower. So the good thing for the bulls is that, we did close still above this the megaphone trend line that we have been watching. So you can see it tapped it again, and we did close over that. And the other good thing, I would say, at least somewhat structurally, I mean, we cannot deny the overall prevailing trend, which has not been broken yet. But we have a low, and now we have a higher low being put in on this week. So that is good for the bulls. If we go over to the daily chart, well, first off, we are still trading just below the weekly 9 here, sitting at 441.54. But we are still above the 20. But let's peek up over the daily chart here on SPY. And this candle's a little bit more encouraging, I would say, for the bulls. Kind of a hammer type of situation here. Buyers on Friday pushing that price back up. Pretty much an inverse candle of what we have on the weekly. But we have to note here that we are still below the daily 9, 20, and 50. So as you can see, a short-term momentum definitely is not on the bull side. As we are currently sitting. Now, we have been keeping an eye on this potential move, to the upside that we were really talking about when we were hanging out down here. talking about seeing some type of upward momentum at the start of last week. And, if I was to guess, yeah, I wouldn't be really surprised to see maybe some consolidation. We had some huge moves, a lot more after we had that huge up day. I really didn't think that we were going to see that move all the way back down. So a little bit more volatility than I anticipated after that run up right into NVIDIA earnings. But I would be wary Monday. Again, my least favorite days to trade personally. Not so much just because, that it's Monday, but more so because I like to see, how I want to see the week set the tone, and then it's a little bit easier to kind of navigate the price action. But of course, that's why we do these videos and prepare before the market opens, so at least we can have some idea of some levels that we are looking at. But I wouldn't be surprised to see a little bit of consolidation maybe here over the next couple of days, maybe in this area. Um, and that's just a wild guess, we'll see. But either way, we have been still watching these oversold conditions here. Momentum's still coming in, still green here, getting just slightly out, and maybe we make a run all the way up to the zero line. So we'll be watching that as this develops, but still no close over the daily 9. And that would be really the first thing that the bulls need to see, at least 1 or 2 days closing over that. But I've even seen, something, a price action close 3 days over and then fails over and ends up being a fake breakout. So have to take it, of course, with a grain of salt until we get, definitely, 3, 4, 5 days. The more time, the better, right? All right, I think that's pretty much everything I wanted to go over on this chart. Let's take a look here. I think the one good thing, at least from our bigger picture fibs that we have been watching, besides the potential higher low, is we did close here right above that 38.2, and I think that is another encouraging sign for the bulls still holding this 438 area, 438.10. I think that is a decent sign here, as that these retracements are showing just a pullback and overall bullish, how should I say, structure, for a lack of a better word. But this is still a bullish fib, basically. Once we break the 50 line, then we start to get down into kind of more bearish territory. Just speaking from the fibs perspective, right? Other than that, do I have much more need to go over on this one? I don't think so. We are still above value area high here on the daily, but we have been for quite some time. Yeah, value area highs are still we're very extended from that area, which is all the way down by 420.60. So, but these really have not mattered too much recently. Let's actually just take a quick peek. I wonder, because where we are on the 2, I think on the 2-year we're below again. Yeah. All right, and I consider that a little bit more healthy, right? We want to be trading, technically within this value range. Of course, it can get extended, like we saw, but, typically price likes to stay within these volume profile ranges, right? So, all right, so let's look at some levels and some areas where we may want to engage the market coming into Monday. Just trying to think if there's anything else that I wanted to go over. Yes, the one thing that we were talking about on Thursday's video was the potential of either a 25% retracement or a 50% retracement of the bearish move that we just saw. And if you cut this candle in half right here, this is pretty much exactly what we got, a 50% retracement, and we were not able to close over that 50% retracement. So I would say that is a bearish sign. It would have been better for the bulls to close over that. but that they were not able to. But it's nice to see here we were calling that out for that either 25 or 50% retracement. There it was, bam, and a nice potential area to catch a short at the end of the day. And you can see here on the 22nd, pretty much just double topped right here, right? And well, triple topped almost, really, right? Because we have here and on the 17th as well. So you can see that clearly defined area where we ended up struggling. Now 1, 2, 3, and 4 times right there. So definitely keep an eye on that 440, 120 area, just in the back of your minds. Certainly could be important. And actually, if you look at it, that is pretty much right where the 50 is. 50 is sitting at 140, 114. And the high pretty much from yesterday was 141.30. So just peaked above, couldn't quite make it. We saw a little bit of selling right into the close. Okay, so I think that's pretty much everything. One more macro chart, of course. Let's do that. Okay, and you can also see here how that pretty much lined up with our pivot right here that we're watching. So we're kind of stuck right here, as you can see, price action, this nice wick, and now we're stuck. And for me, I think there's that potentiality that we trade kind of maybe in between these two areas for maybe 1 or 2 days, but we'll see. And then maybe later in the week we actually get a decision on where price wants to go. All right. Let me just actually get this one out a little bit here. Okay, cool. All right. Let's get into some other charts. Let's take a look at our day trading fibs really quickly. Okay, so went over these levels, and certainly the here's that volatility that we kind of saw, and it's probably a little better illustrated here when Jackson Hole started at 10 up, then we saw the selling, then the reversal. So pretty much a chop day. I mean, really didn't do too much overall, but nice range of trade all the way down from 435 up to this 441 area that we were talking about earlier, pretty much retracing that initial morning pop, right? But we've gone over these fib levels here, and you can really see how nicely they played out today. Once we were back under this 439 area, shorts were on the table. You had a back test here after we got under, boom, taking that short down right into 435. It's a different balance zone, but as far as on this chart that we mapped out, this is our halfway gap of the balance between the 0 and 23. Perfect right there for the long, which I actually did end up taking right here. I didn't hit this short at all. And then we had that push, and when we came up here, for me, I personally took this short on some SPX lottos at the end of the day. You can see here we kept trying to push up over this key area we already talked about just when we were looking at the macro, right? 440, 441, 441.35, that 50 period moving average, as well as that macro trend line that we were just looking at. Couldn't get over seeing these top wicks just kind of distributing, and then we got that sell down. So but for the bulls tomorrow, excuse me, not tomorrow, Monday, I think we definitely want to be keeping an eye on the 439, right? That's going to be the level that they're going to need to initially hold above for longs to be valid for right now. Losing 439, I think, is going to be a bit of a warning sign that we could potentially start trading back into the 438s, and that would be another area I'm going to keep an eye out if they can hold, but it would probably be my next target if I was short against under, the confirmation under 449. But Um, but if we do break that, now I would be watching for selling back down into this 436 area. And let me come back actually into the 30-minute chart. Okay, there we go. So let's watch how that plays out. We do have POC here on the 30 sitting right at 438.50 as well. So maybe you can give that a 50-cent range there from 438.50 to 438. Let's just take a quick peek on where it is, maybe on a 5-day hourly, just see where POC is. Oh, look right there at 439. Okay, and we have it on the 10-day. Okay, just slightly above 438, 439.50. All right, just interesting just good to note. Value area highs here on this 10-day hourly, lining up real nice with that 442, 443 area. All right, so let's go back into our 5-day, 30-minute chart really quickly. Okay, there we go. So yeah, a couple of ways to play it. Again, there is a potential direct short trade here. We have tested this 439 now twice, or this 441 area twice. So if we do hit it again, every time we do hit these levels, it is more of a potentiality that we could break through. So I don't know if I would be interested in a direct short right here, but maybe more so a look above and fail type setup, back test, take the short. Right there, if I was shorting up in this area in the 441s, it probably would be either hitting right there at the money at the 441 or at the 440s is what I would be looking for. So under really under that 440 again, then we're going to be looking at that 439 area as the next target. But if they do start to give that up, I'm going to look it down into that 438, just 50 cents lower, and then 438.50, then 438. But if we want to break that, then we'll look to be trading back into pretty much the opening price from Friday at 436. 80 for 36.50. We can call it in that 30-cent zone, somewhere in there. And so, but if the most, for me, the better short is probably going to be under the 439s. Under that for a little bit more confirmation. So if we're trading over 438, I might give it a shot for the long still. And if we just opened where we were right now, closing at the 439, well, where did we close? Just basically at 440, I'd probably play either the 440 strike or the 441s. And if we are able to break out over 441, I'm going to give it a little bit of time, but maybe potentially a back test, and then we'll be looking at 442, of course, whole number we're going to look at, and then basically for 443 here, which is also another area. This is an area I'd be a little bit more interested in a potential short trade, but we will see. Now, one thing I did want to mention, I actually did take a starter. I was talking about that I wanted to get into a September swing, monthly swing short here up in this area. However, I was not able to do that, but I did take a starter at the end of the day when we were hanging out right here pretty much at that 50, but I would be willing to add if we do get the opportunity a bit up higher, potentially up in the 440, 444s, anywhere from that up into this next area. All right, so let's look into our balance zones here really quickly, and then we will close it up. All right. So you can see here now we were talking about the 435. Here it is right at the bottom of our balance. Boom, right there. Perfect low day touch. And we've been over that level as being important before. And what a nice move. And then once we recaptured our half gap of this balance right at 437, longs were still on the table for me. If we had broken back under that 437, then okay, then we're going to look a little bit more bearish. But So, as I was saying before, 439 is going to really be the line where I'm looking at. However, I'm still not too, 439 is right here at the top of this balance, but we still have that 438 here, the 25%. So you even have all the way down to I would say 438. 438 would really be the last stop of 438.35. Anywhere in this area at 439, if we come down, okay, long skin, you can see what I would anticipate potentially price doing here. If we came down, come up, right? And if I was taking that long down here, probably would be either doing again, probably 439, or maybe probably at this if we were trading down here, I'd probably be looking at that 440 call personally. So come down here, hitting the 440s, take an exit at our key level here, and then trying to get my next target up into this next part of balance up at 441. So, but, for the bulls, if we can, in fact, get over 441, 38, 441, 70, we do want to keep an eye, of course. If you want a little bit more confirmation, wait for 442. But if we are holding over that, say we open up over here, right, for whatever reason, as long as we're holding this area, then I'll probably be looking at the 442 calls, maybe the 443s, for us to get a move up into this next balance area right here, 442.75, 443. We break over that and start holding this half gap. Then I'm targeting up into this area, which I mentioned before, where I would be potentially looking to add into my short position. And, I'm sure everything would look, looks pretty bullish, but when we look at the weekly, of course, we know we are still in a downtrend, and even up here is, even if we trade up here, up into the 445, 444 area, it's still just here's our high, and then it would be a lower high. So, we could see multiple scenarios, where we, maybe we just even tap the half gap and then roll back over. Maybe we hit here and then roll back over. Maybe we actually come up into 445, 445.50 and roll over. But either way, that's what I'll be looking for the long side. Now, for the shorts, you got two ways, you can look at it. We went over a couple of direct short areas as well. Obviously right here is one. I'm not as keen about that one, but certainly a little bit more interested up in the 444 areas for a potential direct short, as I already mentioned. But for kind of more breakout trade shorts, let's look here below 438. You've got about $1 move down to 437. I kind of like the 437 under that short a little bit more, but say we open up, there's a couple of ways you can obviously look at it. Say we open up above 437, you could either try the long, right, up into 439 area, and then look to flip short, or you sit on your hands and you wait to see if we trade back up into 439 backtest, trade that short. And then you would, I would probably hit at this point, I would probably hit at this one, the 439s, I would have to say, just right at the money. And then that first target really being 437 here. But I would be cautious, at 438 for sure. But under that 437, looking to trade back down into 436, 435.50, and then that 435 once again. 435 breaks though, look out. We're probably going to see some pretty big selling. Wouldn't be surprised if we sold down into 433s, in the high 433s, and if we actually break that, 433, and then down into 432, 431.95, and then 431.15. So that's some downside that I would be looking at as far as that's concerned. So, all right, well, I think that's pretty much everything I wanted to go over. I hope you guys have the great rest of your weekend. Thank you again so much for taking the time to prepare with me. Remember, a prepared trader is a profitable trader. So plan your trades and trade your plan. And I will see everybody on Monday. All right, take care.